A very good morning to you, Flow Show viewers. Welcome to Wednesday, halfway through the week already. Morning, Kay.
Hey, good morning, morning, Ryan. Morning, everybody.
How's the old head, mate?
Yeah, the head is fine actually, surprisingly. But yeah, feeling a little bit tired though.
Yeah, a little bit jaded. Yeah, about the same. No, it wasn't too bad a session in the end. We got through a few points, but certainly we weren't staggering around to get to our train last night.
Yeah, exactly. Yeah, but I think that was a good plan to have a train not too late.
Yeah, perfect. And good to meet a lot of the folks last night. Quite a few people turned up. It was nice to meet people again. It's been about 3-4 years since I've been up the city properly, so it was nice to put some faces to names and people you only see online and whatnot, and obviously to meet Stelios, who's still not here because he's still touring around London. He said he should be back on Friday, so we'll see how he fared after that. Right, let's get stuck into stuff because we finished early yesterday, so we got a few things to cover today. Just in China, and just a headline out not too long ago, just showing that things are not 100% back to normal yet, because Beijing has asked students to wear masks at primary and middle schools, just because of the amount of COVID cases going on there. Over in Japan, NHK reported that the government is to discuss wages with businesses and labour groups, a bit on top of what we previously heard potentially about those discussions, the government wanting to push for higher wage increases. And while we're on the wages front, Nintendo said that it plans to raise wages by 10% for current and incoming employees in Japan starting this year. So another double-digit wage increase supposedly coming in from those guys. PM Kishida himself said they are in the process of choosing an ex-Bank of Japan governor nominee, and they are mindful of a very strong market attention on the decision. Whether that's going to stop any of the leaks coming out or the press putting forward who they think it's going to be remains to be seen. But that is ongoing, as we know, and he's going to give some two-way action to a pair like dollar yen. A lot of stuff happening on the US side, obviously, and this Japan stuff weighing as well. Over to the ECB, and Nagel said they must not stop rate hikes too soon, and that thinking that the inflation problem is solved would be dangerous. For the foreseeable future, rate cuts are not on the agenda, and they need more significant rate hikes. ECB Schnabel said recent deceleration in inflation is because of energy. It's a bit of brushing the under the rug. Has concerns that inflation could stay too strong in the medium term. Over to Canada, and BOC's Macklem said they need to pause rates before we slow the economy and inflation too much. Says this is what we are doing now, but inflation is turning the corner. Monetary policy is working, but inflation is still too high. More hikes will be needed if wage growth doesn't moderate alongside inflation, expectations and pricing behaviour doesn't normalise. It's far too early to think about cutting rates. A repeat on his comments on that one. And coming across to the US, Fed's Kashkari says we are not seeing much imprint of our actions on the labour market. He's not lowering his rate path, which still sits around 5.4%, one of the higher ones there out of the FOMC members. Services side of the economy is still very robust. We have to bring the labour market into balance, and we haven't done enough yet. Nobody should overreact to one report, but there is underlying strength in the services sector. He also mentions that the housing market is starting to show signs of life again, which makes their job harder. It means they would have to do more with other tools. That brings us over to Fed's Powell. Obviously, a lot of eyeballs on him yesterday afternoon. By and large, not really many comments, anything new. but the choice ones were that, and again, he brought out that keyword disinflationary by saying that the disinflationary process has begun, but there's a long way to go. Further rate hikes will be needed. The NFP report was certainly stronger than anyone expected, but shows why this will be a long process. Now, probably the key comment is that if data continue to come in stronger than expected, they would certainly hike more and accordingly. We may need to do more if we continue to get strong labour market or higher inflation reports. What did you make of that Powell stuff, Kay?
It's
on one hand, you could take a bit of hawkishness out of it. On the other hand, you could say, well, you know, we've heard a bit of that before. But the dollar hasn't kept hold of the gains that we saw from Friday.
No, but I think the market chooses to read what it or hear what it wants to hear, and it read or heard the disinflationary pressures. He expects inflation to come off, and that's what the market jumped upon. I don't know. I think he's still walking this fine line of we can go further. He's perhaps what the market is really wanting now to buy dollars is that he clearly will say, although they already said it, that they didn't expect rate cuts in 2023, but I guess that's what the market wants to hear now, is that to completely price out rate cuts, because this, let me have a quick look. I think we're still pricing in a rate cut towards the end of the year. Well, half a rate cut really. Yeah, it's really half a rate cut, just like 12 or 15 BPs or so.
Yeah.
So the market really wants to hear that they are not going to move the rates to really continue to buy dollars. For the rest, it's also a factor of correlations, right? The equity market went back up yesterday, so that de facto puts a bit of pressure on the dollar. But then the yields haven't moved, so the bond market is not telling us that is not giving a green light to sell dollars. So for me, we are going to be more in ranges than anything else until next week CPI.
Yeah, definitely. And the first thing I looked at was yields, and they're holding up from their gains, from the NFP more so than dollar yen, which I think that emphasizes the fact that dollar yen is, there's two strong winds blowing each way on the US and the Japan side at the moment. So it's going to be a bit more volatile, I think, both sides of that. Anything we get from Japan on the Bank of Japan and data and inflation and wages is going to keep the yen moving. But as I say, yields holding up there, and a bit of a breakdown between dollar yen and US yields at the moment. We saw stocks. We were standing in the pub and we had a quick look, and stocks had a little flip around on the Powell stuff. But again, even if Powell is, you couldn't call anything he said yesterday dovish at all or anything like that, but stocks, still remain higher. Even talking about rates maybe going higher, even with the strong jobs market, I think personally we are seeing this switch now between, good news for the US is good news for stocks, as opposed to the old rule of thumb, which bad news meant Fed easing meant cheap money for stock buyers. I don't think it's 100% switched yet. This is one of those times, I think, where we're in the midst of the tide changing rather than moving in one direction. But yeah, as I say, there's still signals that say that the dollar may not slip too far on what's been going on. And again, looking at yields, that seems to bear the case as well. 2 years holding up, fine enough. 1 year's, a bit shorter term, more towards that 5% mark than they have been pretty much for the last few months. So the message has been taken on board that the Fed is, going to get rates up there and hold them up there. And I don't see that changing anytime soon, really. Perhaps not even with the CPI next week, unless it's a real downside number. I think anywhere around about expectations, the market it's already priced the trend that we've seen since, middle of last year when inflation topped out. So inflation falling further isn't anything new. It's just, I think, the scope of how far it may fall and the variation to what's expected next week. So just looking at some of the other pairs, euro dollar, a lot of these pairs are looking a bit dead cattish, i.e. we're seeing a bounce. I mean, it looked yesterday over all that stuff that it did the typical clear out anyone who was long into 107 properly before it made the bounce. The same type of moving cable, you know, at a clear out under 120, then we got the bounce up. So, you know, we could be heading back higher. I don't think the dollar's done just yet. So we need to see whether how far these bounces go. For something like Aussie dollar as well, we're banging into this 70 level, not getting through it at the moment. So, you know, as I said previously when we came down, all these resistance levels become hard work again, and we have to chew through them once more before we get to these highs. I think personally for Aussie dollar, we need to get above 70 pretty quickly. If we do, then it keeps this move in play, this phase of the move in play, and maybe we get a look up towards 71 again. If we can't get through here, I think maybe the momentum would start to shift a bit more to the downside, and we might perhaps get a move through these lows and maybe down towards that fib of the October move there at 67.80. What are you making of things generally, Kay?
Sorry, I was just coughing. Yeah.
You fell asleep, didn't you? You nodded off.
No, not at all.
Well, I'm just saying, what do you make of these bounces in pairs like cable, euro dollar, Aussie dollar?
I mean, some of them were technical. If you look at the euro dollar, there is support 106.80. If you look at the cable, there is support just under 120. I can do a quick point around.
Yeah, mate.
What I notice and what I note is that everything seems to be living its own life a little bit right now, because we had this strong bouncing cable, and yesterday I was already saying that euro sterling looked a little bit exhausted, and that's exactly what happened. Euro sterling is lower, and that also is underpinning the cable. Then the yen is living its own life, as we know. Then Aussie Kiwi has put in a pretty big move as well. So there's a lot of stuff going on the process as well, and some of them trade risk positive, we may say, and others don't. Because I'm quite surprised finding Euro Swiss up 99 this morning. I haven't really found anything that tells me why the Swiss has all of a sudden strengthened that much. Yeah, it's broken a bit of a trend line there, but is it just technical? I don't know, but it is a fact that when we look at it after those spikes above parity, euro Swiss can't hold parity. So there's a lot going on the process as well. So that's why I'm saying I think stuff is living a little bit its own life, one and the other currency. And then when you turn to the dollar, you have we've had the recovery in the dollar, but then now it's as I was saying as well in the chat room yesterday, if you trade kind of a soft landing, these are the kind of moves you are going to see as well, because the dollar, for instance, what I was expecting is starting to materialize, like risk doing a little bit better with the equity still holding up despite higher yields, and then you find it back in the dollar and in the euro mix, for instance, where the Mexican peso finally after the clear out is starting or strengthened again. So there's a lot of stuff going on, and I wouldn't want to take big bets on the dollar going into next week's CPIs, because it has the potential, of course, to move the markets. And as we have already been saying, and as I've been saying after last week's central banks, they're all going into data dependent territory. So data will be important. And so yeah, it's perhaps a little complicated, but there's a logic behind most of those moves, in my opinion.
Yeah, no, exactly, mate, exactly. You know, one pair that's got me scratching my head is dollar yuan at the moment. It's it's really not doing an awful lot. And it does have periods when it doesn't do an awful lot, as we can see here, beginning of December. But even with some of these moves in the dollar and the risk moves and such, it's not going anywhere. I don't know if this has got a comforting hand around it at the moment from officials in China, just keeping things steady while they reopen. But it's not giving me any clues on this one at the moment. I'm still in my buy stop at 60, 80, 50. I'm not sure how long I want to hold on to that for at the moment while it's holding below and making this sort of short-term series of higher lows. It's drifting down a bit. I might chuck that in. I don't know. See what happens. What are you making of the yuan as well? It's it's often a very good bellwether currency, isn't it? It's pretty clear what the officials want to do in China, what China's doing, but this one's giving no clues at the moment. What do you think, Nate?
It's we're if you look at the traffic areas going back into early 2023, then mid-January, we're turning around, right? So in my opinion, no, you can keep on the prior chart, and if you actually go back to stay on this one. And if you go back into July, August of last year, this 680 around is
all this area here.
We could say we are in neutral territory right now, and we are waiting to pick a side. What is going to drive it? I think the as well data out of China. If they succeed in orchestrating their reopening, Chinese yuan will probably strengthen a little bit. If it's sputtering, then we'll likely take the other side again and move higher again. I think in the really longer term, I'm still not a huge fan of being short dollars for long. I would try to catch a knife anywhere 670 and below, perhaps because I think 660 is going to be a big level. But right here and now, I'm just watching what it does, and very little telling me that it's going to pick one direction or the other, because the signals are very mixed out of China right now.
Yeah, I agree with you, mate. I agree with you. Do you want to take it and have a little look around?
Yeah, sure. I'm going to go quickly over the majors. Showing a little bit what I was talking about in euro dollar in the cable. So euro dollar, do you guys see my screen?
Yep, got it, mate.
Okay, so euro dollar just had a quick look below this 106.80, and we are now back into we went back into the zone where it was supported before. Support, resistance, 107.70. As I've been saying, this has always been a bit of a level that I was watching on the way up or down. So that's where we're stalling now, and I think we may range a bit. Not saying that we are going to range here until the CPI, but unless US rates start to falter and fall back down to below 360, for instance, in the 10s, or below 430, 440 on, or actually already 440 on the 2s, for instance, and this pushing higher, I am, as I was saying earlier, I'm really in range mode for now, and I think we are going to have opportunities to trade both ends. We could actually go a bit through, then move into the 108s just, and then come back and retest those lows. And I think there may be just a range coming up now, 100, 150 points range. That would be kind of logic in my opinion right now, unless we see big moves in equity markets or so. Cable pretty much the same. Yesterday I said about this 119, 70, 85 zone. I had a same as in the euro dollar, really. When 5-10 pips below, and we're back above. The first real resistance for me is around here, 121.40, 40.45. But for the time being, we're already struggling to hold the 121. But I wouldn't hang my hat on to 121 really. We have seen stopping there, but it's not really a big level, the 121. I would rather say 121, 40, 45, stretch it to 50 perhaps. So we've got the same 150 points to play in, I think, until Friday's UK data. And even though they are going to be fourth quarter, etc., the market is still going to carefully watch those UK data. At the same time, as I was saying, the euro sterling looked a little bit like running out of puff, and we are back below that 89, 10, 20 zone that I was watching before. People in the room know I'm running this up. I'm having this option, right? I'm long a call 88.5, which is running for another 2 weeks. But I've added to my hedges, luckily around 67 here. I sold a few more the other day. So now I'm patiently waiting. I'm hoping for a move back down below 88 3/4 to have a bit of an acceleration down to low 88s, which is possible without really changing anything to the major view, but it is possible. Let's see how we fare around this 88 3/4 already. Of course, top side 89 10 20 back resistance now. So this is the one we are going to monitor. Yen, it's a tough one. I mean, yeah, if really the companies are going to hike wages as they do, and as we have seen this wage picture change yesterday, it's likely that the yen is going to strengthen. Now, next week there's going to be a possible double whammy or saloon door, right? With the US CPI and then the Bank of Japan nominee. For the time being, Amamiya is still the leader to take it over, the first candidate. But if those wages, and that was what Kuroda already said that they were watching as well, if those wages really hold up and go higher, I think the market will try to anticipate a stronger yen with or without Amamiya. And we are finding it back as well in the yen crosses. Look, for instance, euro yen, where I thought that this had a chance to break the other day. It has a violent move back down, and now we are like on this trend line, but holding just. It's to me now that the yen pairs are looking fragile. And if you don't want to do any dollars, keep an eye on those yen crosses, right? The commodity yen is not really very clear, but like we had strong rejections as well in the sterling yen. Now we are already trading back below this 158.5. Breaks up 150. There's room to go have a look at 157.5, I think. Top side 159, 40, 50 is where it should cap now to see this move lower. But yeah, I think the yen is behaving pretty well, right? I wouldn't be surprised that the market tries to push the yen higher despite those higher US yields. It's going to be a case of not standing in the way of trains in the yen. And I reckon that if we see moves higher in yen pairs, that we are going to find a few sellers. Aussie, Kiwi. I think Aussie is we've traded above and then we failed and went back into it, and now we tested and held the underside of the channel. So I think we are broadly in a channel, and we are around the middle area. Yeah, call it 69, 90, 70 the figure. And then above, I've got like 70, 35, 45, which should be interesting. On the downside, it's really going to be about this 68 3/4, 69 the figure zone, to see if that is holding. Kiwi, we are doing relatively the same, but this could be like a bull flag, right? It depends. The jury is out on that. But keep a very, very close eye we're quite a bit away now, yeah. But keep a very close eye on 65.5, and then on the underside, there's a bit of support which held 62.75, and but the bigger one will be 62.30, 62.10ish. That's going to be the big zone if ever this comes back down there. And I'm voluntarily looking at it a bit from a wider picture, because we're less than a week away from the US CPI, and the market is likely going to prepare for that. So we might have like a bit of violent swings. So pick your levels inside if you want, or else watch the larger, the wider picture. Quick look at the metals. Silver held this low 22 for now. So that's an interesting fact. I'd say respect it, 22 figure 10ish. Respect the level for now, and see what goes on. But to really get going again and possibly retest this 24.5 zone, we need to break for a starter back above 22.90, 23.05. On gold, I have no idea, really. I have no clue. I'm not interested in trading it right here and now. The only thing I see is that it held this support. So why not have a retest of 1900 at some stage, depending on what the dollar does. And then let's have a look at the MEX. The MEX finally found some of its mojo back after the day before yesterday's sharp move higher in Euro-MEX on a clear out of short-term MEX positions. We're back into the channel. We refused again a retest of the high 2050s. I'm started to cover a little bit of what I have just ahead of this support line. But I think there's a fair chance now, and being Wednesday as well, so there's going to be the 3-day carry tonight. That may keep a lid on this pair, perhaps for a little visit of low 2010s, where I look to take off a little bit more. But seems like the scare on the top side is over for now. Dollar MEX, we had about the same thing, broken above this 19.25 resistance very quickly, and now we are back well below those prior highs, and we are actually on a bit of support right here in the low 1880s. Again, it's Wednesday, 3-day carry coming up, and with the dollar a bit on the defensive in the rest of the sphere, we may see a test below, but just bear in mind this 1850 is a monster level. If you look back on the longer term as well, it's really a monster level. If this would come to retest, well, just monitor it closely. If it breaks, we could really be on the way to 17s. But if it holds again, then I think we may either be in a wider range again, or perhaps having found an intermediate bottom, and why not move back into the 19s more significantly. But that's perhaps next week over the CPI. Looking at the clock, we're okay. NOK. So Euro NOK violently broke up early February, but we couldn't reach the what I thought would be a bit of a target. We couldn't reach the 1120. We stopped about 0.5% before, and then we had this violent rejection, and we are already back on intermediate support here. But I would say the most important support, if we get a retest thanks to higher oil and gas, if we get a retest of the 1080s, 85, 88, that's going to be the zone that I'm going to monitor. I have been long Euro NOK. I've taken it off the day before yesterday around 1108, and then I'm just waiting and watching energy and what's going to happen. Perhaps also on the Riksbank tomorrow may have a say on what's happening in Scandinavia. But I'll we'll cover that tomorrow. I have absolutely no idea what they are going to do over there. I think it's they're expecting 50 BPs, and some say that they may even do more because of the latest stocky weakness. So that may influence the Noki as well. Okay, dollar Norway. We rejected these 1040s, prior lows, prior highs, flip. This is a pretty decent zone that has been rejected. And if it's similar to Euro Noki, we are already on intermediate support. I'd say though that of course the dollar has a influence on this, of course, but I'd say there may be a chance to revisit low tens, a bit similar to the Euro Noki there. As we always say, the market isn't going one way, so maybe why not go for a retest, which I think is then going to be enough again to start climbing again. But I'm not counter trading it. I haven't got anything in it. I'm just watching the moves, watching the game, and that is it, Ryan. Unless somebody has something to say, I'm giving it back to you, mate.
Yeah, no problem, mate. Thank you very much. I'm just having a quick look at some of the stockies, actually. The FTSE keeps making some decent moves. We got above this shorter term highs around the top of that 76, 77 area. And now we're starting to hold above the more longer term highs, 77, 90, 78. So that's looking pretty strong for now. That's going to keep things ticking over. I mean, it's a similar story in the rest of stocks. You know, they're all starting to creep back up towards prior highs. That sort of thing. We know the S&P is still staying in the game here. Obviously, got a way to go till we start challenging those highs. But this looks like it's now changed around. Breaking this trend line looks like things have changed around now. So we could be on for a bit of a move higher in stocks, particularly if the data starts coming in a bit better. I think we're going to start seeing stocks react to that. They're certainly not going down, whether it's good or bad data. So I think if you've been playing this from the short side for a while, you might want to just think about the fact that, again, the tide might be changing for this one, and stocks in general, and you know, maybe we're into dip buying mode more than we are into rally selling mode on these breaks here. Again, you know, a lot of data to come, and prices will move accordingly when we get to each one. On the FX front, you know, just some other things. I've gone manual on this one. I did have an offer in at 7.8495. I've just gone manual while Kay was doing his around the grounds. Pretty much bang on the top of the band here. Stop just above 7.8650. The HKMA will protect this band for now until we hear differently. So for me, it's a low risk trade playing against that with, you know, a big central bank potentially as my backstop. Low risk trade, as I say. We'll see what happens in that one. But yeah, there's definitely some things going on that we need to be aware of. And like cases, I am in one of these moods where I can't pick a side either way. I think the dollar has some strength still in its packet, but I don't think it's going to be all one way. You know, like looking at euro dollar, as Kay was showing, yeah, we've had a move off the high, but it hasn't gone that far really. I think we've got to be respectful of what's going to happen moving forward. Yeah, I don't know if any of you guys and girls got any questions you want to throw at us. Otherwise, we'll call it a day again. Mike, nice short on the old cable there. Glad you got some good pips out of that one. And you're going to stay short, are you, with CPI next week? Brave man, big data. Brave man.
Yeah, and Gavin was saying like looks mid-range is dollar makes. Yeah, it does Gavin. Yeah, but that's the thing. And if we look around the grounds, actually, we are a little bit in a similar kind of scenario. And as I was saying yesterday, we are in a near perfect soft landing trading environment. Apart from some outliers, I'm still trying to figure out what happened to the Swiss franc, but so and the yen living its own life. But the rest is pretty much trading as I would imagine a soft landing looks like. So you have the mix, which is the neighbor and partially the manufacturer of the US doing well, or better at least, and then the dollar a bit mid-ranges, bit thanks to the higher interest rates, but then per correlation, we know that correlation with equities, when equities rise, usually it means a bit of a lower dollar, so that counterbalances that higher yield effect. And yeah, it's pretty much. And then you look at, for instance, stuff like the Euro Canada a bit lower, Euro sterling a bit lower, which is usually a sign of better risk as well. So those are, I'm seeing the pattern in the market as trading better for risk selectively.
Yeah, and you know, Peter, they're asking about crude. You know, crude's strong, or at least bouncing off the lows we've seen recently. And again, it's another one that I scratched my head why it was coming down here so low. Because, you know, China reopening usually, by rule of thumb, is a boost to commodities. And if they're coming back strongly, and if the global economy isn't heading to deep recessions, you'd expect oil to be rallying, not coming down like we saw down to the 72s again. But we've had a rally again, and you know, can it continue? I don't see any reason why it can't. I've got no reason to say, yeah, it's going to keep going all the way up to 82.50. But I didn't know why it came down here, and I still don't know why it's going back up again. And there's times when, as traders, things aren't clear. There's times when the market is just going to move because that's what it does. And all you can do as a trader is, if you don't understand why it's moving, those are the times you just switch to the technicals and say, fine, you know, if the oil's going to bounce back up to 82.50, what do I do at 82.50? Do I try shorts again, or do I look for a break trade if it goes through? You know, there's times when you want to know what's going on. There's times when you just look at the charts and you pick a level and you say, that's the level I'm going to trade. You know, largely irrespective if there's no news to tell me otherwise. And the same thing, you know, you can look at dollar CAD. I've been waiting for this one to get up to 135 for a short for weeks, and we can't even get that far. You know, 134, 70, 80s, that's as far as it's going. I think now potentially if we get through that area, 135 might break and we might get a little bit of a blow through, purely because we've had a few goes at trying to get up there. So there's obviously something in play here, sitting on they're selling it when we get that high. So if we get above there, they might get tripped on their stops and we see a move up, you know, 135.5, 136. Conversely, on the downside, sometimes this pair's been on the oil bus, it's been off the oil bus, been on the dollar bus. You know, the correlations don't last at the moment for very long. You know, are we seeing it come all the way down because we've seen a bounce in oil? Well, oil's still at the highs, and you know, CAD's come off some. So again, there's times, as I say, where things aren't 100% clear, and I like things when I trade to be clear. I like to know which wind's blowing what way, what are the reasons why something's moving, and if I don't really understand those, I just have a bit more caution in my trading, and I just, as I say, sit on the levels, wait for the levels, trade the levels. That's the best way you can do it, as far as I'm concerned. I don't know about you boys and girls. Right, well, if there's nothing else going on in the world, I think we'll call that a day. I'm going to go and have myself some breakfast, a nice big fry up, clear the cobwebs from last night. What you want, a bit of brown flakes for you, Kay?
What did I have this morning? Oh, I had an omelette, mate. That was really great.
Nice, very nice. Yeah. Well, as always, thank you very much, boys and girls, for coming to the Flow Show. Sorry there's not much going on right now, but such is markets sometimes. We can't have excitement every day, all day, every day, so we have to take it as it comes. We shall see you all bright and breezy tomorrow. Thank you very much, everyone. Cheers, Kay.
Have a great day, everybody. Have a good day, Ryan.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.